Welcome to the Midweek Market Update at Wealthy Bucket. The Midweek Update is produced to gauge and analyze how the markets have performed and how to prepare for the last few days of the trading week based on our Bucket Weekly Market Forecast that our premium members receive each and every Sunday. Wealthy Bucket does not provide investment advice. Before engaging the markets, please consult a financial professional to see if it is right for you. Trading and investing in stocks, options, currency, and futures carry risks that can result in a financial loss. So let's take a look at the S&P 500. And we've been talking about this for a couple of weeks, how we've been waiting for the market to roll over. And finally, today is the first down day in quite some time. We get our first pullback in the S&P 500. As you can see here, on today, the S&P 500 closed down almost 7 points, and you don't need me to tell you that. You probably already know that because the S&P 500 is followed widely by not just investors, but anybody who wants to know more about the markets. You can't avoid what the S&P is doing. You can't even hide from it. It's in your face. It's not just on business TV. It's on every network that has news worldwide, and we have to talk about why this is happening. And we talked about this in our Sunday Bucket Weekly, and we talk about it all the time, how you as an investor cannot time your entries, you cannot maintain your positions if you don't understand what's driving the market. Time and time again, we hold seminars and webinars, and investors seem to think that the golden goose is, well, I should just pick better entry points or better exit points. No, you can pick any entry point and any exit point, and you probably still won't do well because you can't ride your positions. You can't take a longer term approach, so to speak, and ride them to where they need to. Hence why most investors, and I'm talking to you, that they generally don't do well over time trading the markets on their own because they cut their winners off too early. Okay, they cut their winners off too early, and they hold on to the losers. And you might not think that's not you. Well, it's a lot of people out there, and just simply by picking better entry and exit points isn't going to make that any better for you if you can't ride your positions, because nothing goes up in a straight line and nothing comes down in a straight line. You have to understand what's going to drive the markets, and if you don't, you're just going to continue to go on with frustration. And we talked about this last weekend, how we were expecting the yen to come back up into this level here between 98.01 and 98.22, and it's done that. Here we have Monday, Tuesday, Wednesday. Now Thursday overseas, it is trading currently, and it's in that level. You can see on Wednesday, or today for that matter, price shot in and it couldn't close into it and didn't close above it. It traded slightly through that level, and you can see here this purple line is the S&P 500. So as long as the yen continues to move higher, then you know that you're going to have further pullback in equity markets. So what we're looking at now is we're expecting the yen to trade further into this level. It's okay if it does. We just don't want it to close above it. If it closes above it, we have other things that we need to be concerned about, because it recently, and by it I mean the yen, corrected this interim uptrend. It finally corrected that, and this caused a lot of sideways to bearish market movement within the equity markets. The equity markets, namely the S&P, didn't really take off until, we'll call it May the 29th, where the S&P started to take off, and you can see how the yen came back down and the equity markets took off. So looking into the last 2 days, or even tomorrow, the trading day, you want to really, really watch this level here. If we get a close above, then you're going to expect further downside risk in equities, and we'll talk about that momentarily. But going back to what I talked about earlier on is that people don't understand how to manage their positions or ride their positions. You don't even understand how these markets work, which means if this level holds and the yen continues and the yen trends back downward, then you have confirmation that you can continue to hold your long positions, or even better, you can look for newer trades. And that means you now understand, or you have somewhat of a probability that you're going to get the direction right. And we mentioned this last week in our video, that if you can get the direction of the market right, you can be a bad stock picker and still make money. The problem with retail investors are they're so caught up in trying to pick the right stock that they can't even get the direction of the direction right. And then they blame it on, well, I need better entry and exit. And that's not the case. It's you don't understand what's driving the markets. And there's other forces out there. The currencies are going to be the main driver of all things out there regarding the capital markets, because the currency markets is one of the largest instruments out there, and that's not debatable. So if the yen continues to move higher, we're expecting the S&P to trade down to the 1828 level. At the 1828 level, this is the level between 23 and 28 we had identified as our first main pivot point. From here, you can start looking for an upswing, so to speak, a continuation. That would be an ideal place to look for a re-entry into the market. But you got to let that settle down, and that would be because the yen continues to move higher. So let's take a look at the Dow. The Dow is coming down. It's coming down a little bit faster. It lost a little over 0.5% today, and we're expecting the Dow to trade down to 19,756 at this point in time. And so we talked about this last weekend. It's suggested to not take any new trades because there's too much risk on the table, meaning there hasn't been a down day. The market continues to go higher. You want to wait for at least the first pullback to test the market. And when you test it, don't go in with full orders. Test a little bit at a time. That way, if you're wrong, meaning the yen continues to move higher and the equities continue to move down, you can either get out of those or re-enter the market at the next level that we've identified for our premium members. So that is your takeaway. That's what's going on. That's what you need to watch out for going into the last 2 days of the trading week. What is the yen going to do? No one knows. Only traders are going to take this to where they want it to go. So if it closes above this level, then it's suggested to not take on new positions. If it holds and pivots back down, and this is in conjunction with the S&P trading into its immediate support levels and the Dow trading into its immediate support levels, you now have a good and well-timed market. So timing the market is absolutely possible. You just need to understand what's driving the markets rather than thinking you just need to find better stocks or better entry and exit points. You need to find money flow. That's why we call our services money flow. If you get money flow down, you got a good shot at making good money in this market. If you have any questions, please email us at service@wealthybucket.com. And we hope you've been having a great week, and we thank you for stopping by the Wealthy Bucket.